Journal entry. Journal entry is an accounting journal is a detailed record of business financial transactions. The original record of a company's transaction is in a general or special journal. Debit and credit entries are used in journal entries to record each transaction's effects on a company account. Adjusting and closing entries are also recorded in a company's general journal and referred to as journal entries. Journal entries for the balance account consist of number 1, asset account. The asset account is in debit. The asset is all the wealth a company possesses in value by money and used in corporate operation. Number 2, liability account. The liability account is in credit. The liability is the obligation to pay to other is due to credit for cash transactions. Number 3, owner's equity. The owner's equity is in credit. The owner equity is a discrepancy of assets with liability. Number 4, revenue account. The revenue account is in credit. The revenue account is the result of sales activities on a company over a period. Number 5, expense account. The expense account is in debit. The expense account is the reduction of revenues that will produce net profit in the company before tax on the income statement.
The balance sheet. Balance sheet report is a report that shows a company financial position at the specific date. The balance sheet is one of the 5 main financial statements of a company. 3 components of the balance report, namely number 1, asset, number 2, obligation, number 3, equity or capital. Asset consists of current asset and fixed asset. Obligation consists of liabilities, current debts, and long-term liabilities debt.
Assalamualaikum warahmatullahi wabarakatuh. Now I will explain about bookkeeping. Bookkeeping is the recording of financial transactions including sales, purchase, income, receipt, and payment. In accounting, the bookkeeping methods are single entry and double entry. For modern day purpose, is most important to know the double entry bookkeeping system. The basic accounting equation is the foundation for the double entry bookkeeping system. For each transaction, the total debit equals the total credit. Thank you.
Okay, now I will explain about the difference between accountant and bookkeeper. Accountants are responsible for classifying, analyzing, interpreting, reporting, and summarizing the financial data. Meanwhile, the bookkeeper are responsible for the recording of financial transactions in their books. Activities carried by an accountant are list of accounts, preparing the ledger, design financial report, make a budget and compare it with actual result, and make tax report. Activities carried out by the bookkeeper are issue invoice to customer, record invoices from customer, record cash receipt from customer, record change in inventory, and processing the petty cash transactions.
Now I will explain about general ledger. Check it out. Ledger is the final repository of the accounting records and data. General ledger is the backbone of any accounting system which holds financials and non-financials data for an organization. Function of the general ledger is to calculate the balance of each account used in the company. The general General ledger should include the debts, description, balance, or total amount for each amount. It is usually divided into at least 7 main categories. These categories generally include assets, liabilities, owner's equity, revenue expense, loss and gains. Last, posting. Posting is the process of